If you've ever seen something like this on a trading platform and you had no idea what you're looking at, then this video is for you. What you are seeing here is called the order book, and yeah, it can look a little intimidating if you are new to investing, but here's the thing, it is actually way simpler than it looks. In this video, we are going to break it all down, what the order book actually is, how to read it, and most importantly, how to use it to make smarter decisions before placing your next trade. We will even go a step further to explain this concept as well. There are also bits of information you will need, and they can all be deduced from the order book. I'll be walking you through a real example using an MTN stock. This is actually a snapshot I took some time back, but once you understand what's happening here, you can apply it to any stock anywhere. Alright, let's get into it. Let's start with the first one, the buy price. Now, depending on the platform you use, you might see this labeled as the bid price. Don't let that throw you off, they mean exactly the same thing. I will be using buy price throughout this video to keep things simple. So what does the buy price actually tell you? It shows you the highest price that buyers are currently willing to pay for one share of a company. In our MTN example, you can see the current share price is 6 cedis 48 pesos, but the buy price is showing 6 cedis 42 pesos. So even though the stock is trading at 6 cedis 48 pesos, the highest anyone is actually willing to pay right now is 6 cedis 42 pesos. Here's why that is. At any given moment, different buyers have different prices they are comfortable paying for the same stock. The platform doesn't show you all of them, it just shows you the highest one. If you're curious about all the other prices sitting below that top bid, that's called level 2 data, and it's something I'll be covering in a future video. And honestly, showing you the highest price makes perfect sense if you think about it. If you were looking to sell your shares, you'd want the best price possible, right? So the market does exactly that. It puts the best offer front and center. Now that we've covered the buy price, let's move on to the next one, which is the buy volume. Now, the buy volume is pretty straightforward. It's telling you the total number of shares that buyers are willing to purchase at the highest buy price we just talked about. Let's use our MTN example once again. We know the highest price anyone is willing to pay right now is 6 cedis 42 pesos. The buy volume takes it a step further and tells you how many shares people want to buy at that price. In this case, the buy volume is 17,000, meaning investors have collectively placed orders to buy a total of 17,000 MTN shares at 6 cedis 42 pesos each. And mind you, it's not 17,000 people, it's 17,000 shares. So to put it simply, the buy price tells you at what price people want to buy, and the buy volume tells you how much they want to buy at that price. Together, they give you a picture of the buying pressure in the market at any given moment. Now let's flip to the other side, because the sell side works in almost exactly the same way, just in reverse. The buy price tells you what buyers are willing to pay. Then the sell price tells you what sellers are willing to accept. In our MTN Ghana example, the sell price is 6 cedis 48 pesos. That means the lowest price any seller is currently willing to accept for one share of MTN is 6 cedis 48 pesos. Just like the buyers come in with different prices they are comfortable paying, sellers also list their shares at different prices, but the market only shows you the lowest of those prices because that's the best deal available to anyone looking to buy right now. This is also why the sell price is sometimes called the ask price. You will see that on other trading platforms. It's the price sellers are asking or requesting to sell their shares. They have different names, but they mean the same thing. By now, I'm sure you can already guess what the sell volume means, and you are probably right, but let's go over it. Just like the buy volume told us how many shares people want to buy at the buy price, the sell volume tells us how many shares are currently up for sale at the sell price. In our MTN Ghana example once again, the sell volume is 3,729 shares. That means sellers have placed orders to sell a total of 3,729 MTN shares at 6 cedis 48 pesos each. So to bring it all together, the sell price tells you what price people are willing to sell, and the sell volume tells you how many shares are available at that price. So now that you understand the 4 metrics we have gone through, we can start putting them together to uncover even more useful insights, the ones that can seriously sharpen your decision making as an investor. Let's start with the first one, which is the spread. The spread is simply the difference between the buy price and the sell price. In our MTN example, the buy price is 6 cedis 42 pesos and the sell price is 6 cedis 48 pesos. So the spread is 6.48 minus 6.42, which gives us 6 pesos. Think of spread as the negotiation gap. Buyers are saying, I'll pay 6 cedis 42 pesos. And sellers are saying, I won't take anything less than 6 cedis 48 pesos. The 6 peso gap here is what they haven't yet agreed on. And this gap actually tells you a lot. A tight spread or a small gap usually means the market is active and trades are happening easily. The key word is easily. A wide spread means fewer people are buying and selling, so it's hard for both sides to meet in the middle. This means little or no trades are happening for that stock. This is why traders use the spread as a quick check on market health before placing a trade. It's worth looking at the spread because the wider it is, the more the price needs to move in your favor for you to make a trade, and that might be a big problem. So this brings us to another metric that you'll be hearing constantly in your investment journey, which is liquidity. Liquidity is simply the measure of how easily you can buy or sell a stock. A highly liquid stock has plenty of buyers, plenty of sellers, lots of trading activity, and usually a tight spread. A stock with poor liquidity is the opposite. Fewer buyers, fewer sellers, less activity, and a wide spread. The more buyers and sellers are in the market, the easier it is to trade. And more importantly, the easier it is to get out when you are ready to sell. And this is a trap a lot of beginners fall into. They buy a stock, and when it's time to sell, nobody is willing to buy it from them, and their money ends up stuck. Knowing how to spot liquidity helps you avoid that. And there's one more important thing to note. Sometimes large institutions with big pension funds and investment firms can hold enormous amount of shares in a single stock. And when they do that, they can artificially inflate the price just by sitting on those shares, creating an impression of a high demand. If you blindly buy a stock like that without checking the liquidity, here's what can happen. You get in at a high price, and then the moment the large institution decides to sell its shares at once, the price can drop sharply and very quickly. By the time you react, damage might already be done. This is exactly why liquidity is worth checking before you invest anything. A stock that looks attractive on the surface might have a thin liquidity underneath, meaning a single large player can move the price dramatically in either direction. So before you invest in anything, it is always worth asking yourself, how easy will it be able to sell when I want to? And finally, let's bring everything together with the last metric, which is the bid-ask imbalance. Now cast your mind back to the metrics we looked at earlier, which is the buy volume. It was 17,000 shares, and the sell volume was 3,729 shares. The moment you put those two numbers side by side, something becomes very clear. Buyers are requesting roughly 4.5 times as many shares as sellers are offering. That gap between the two is what is called the bid-ask imbalance, and it tells you which side of the market currently has more pressure. When the buy volume is much larger than the sell volume, demand is stronger than supply. That means buyers are pulling harder. When the sell volume is much larger than the buy volume, then we know supply outweighs demand. So why does this matter? It matters because that imbalance can give you clues about where the price might be heading in the short term. If large numbers of buyers keep competing for limited number of shares, sellers realize they have something people really want and they may start raising their prices. On the flip side, if sellers far outnumber buyers, they may have to lower their prices just to attract a buyer. In our MTN example, the buying pressure is significantly stronger. But please note that the bid-ask imbalance is a clue, not a guarantee. Markets move fast and conditions change, but when it's used alongside everything else we've covered today, this gives you a clue about short-term market sentiment, but it doesn't predict where the price will go. So why does all of this actually matter? None of these indicators can predict the future with certainty. No number can. They give you something incredibly valuable, a window into what the market is thinking right now. Here's a useful way to look at it. A company's financial statements tells you whether the business itself is worth investing in, and it's something we've covered in another video. You will see it right here. Then the order book tells you how investors are behaving around this business at this very moment. The best investors pay attention to both because one tells you the value of the company and the other tells you the mood of the market. And when you combine the two, you stop guessing and start making informed decisions. But this is just one piece of the puzzle. There is a lot more that goes into becoming a confident investor. And I'm going to break all of it down on this channel in the simplest way possible, just like we did today. So if this video has helped you and made you understand these concepts, make sure to check out others and subscribe to this channel as well. I'll see you in the next one.